Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment, and that's going to be Andy Swan, co-founder at LikeFolio. Welcome back to the show, Andy.
Hey, happy Monday.
Happy Monday to you, too. We're covering American Express. They report earnings on Thursday. The stock's done pretty well so far this year, up about 10%. But what kind of data are you guys seeing out of LikeFolio? Because I keep on hearing rumors that, consumers are pulling back a little bit on spend.
Yeah, I think there's actually three good reasons to be bullish long term on American Express. Why we consider this the best of breed or among its peers. First of all, Amex has really set itself up as a rising status symbol. This is a company that offers great perks to its members, and because they have a high credit score base, it just feels good to be in that category and whip out the Amex card rather than your MasterCard. I think some people get a status boost from that. That's really translating very well to, we think, the younger generations. We're starting to see younger people talk about Amex in a positive way. And on the last call, the company went out of its way and said that millennials and Gen Z consumers are its largest growth drivers, representing more than 60% of card acquisitions in 2022. And lastly, we think, Amex, in a tough economic environment, is fairly well insulated from some of those economic headwinds. We're seeing a lot of people talk about maxed out credit cards across the board, but this really doesn't seem to be the case with a lot of Amex card holders, because again, they're the high credit score kind of luxury demographic who seem to be faring a little better in this economic environment. So we think, it's a tough road out there for credit card companies, for banks, but Amex is one of the best of breed right now and could be a really good play long term.
Andy, you're touching on exactly what I think is the strength here of American Express, and that is, as the economy appears to be slowing, I mean, you've heard Brian Nickel from Chipotle come out and say their customers, the more affluent customers, aren't really being affected as much in their activities by inflation. Well, that's what American Express does. They target the wealthier customer. And because they do that, they can charge those higher fees to the merchants, and they can do all that. Now, their loan loss or their credit loss provisions are going higher, and there are some delinquent payments, but all things considered, the pie that they have is better than other people's pie, Andy, and I think that's good for their stock.
Yeah, I think so too, and I also think another thing to tie in with one of the themes that we've been talking with you guys about is on the airline side of things, the kind of resurgence of Delta as a luxury brand, and that partnership that Delta has with American Express as people get back out traveling, some of the perks that are involved in that. I think that's become a really big driver of both the status side and the functionality side of American Express. I think they're opening a lot of those partnership type of accounts, especially with younger travelers. So good partnership there, and really kind of reinforces that luxury brand idea that we're seeing pop up across all types of industries.
Yeah, and we continually talk about, Andy, the pickup in travel and entertainment spending. That's right in the wheelhouse for American Express, especially from that high-end consumer at this point. But you mentioned the partnerships that they have, the points and the co-branded cards that they have with Delta, amongst others. Is that showing, a little bit of resolve here, even though we're starting to see maybe people pulling back a little bit, even though, the stickiness and inflation is on that services, travel, and industry? Yeah,
it's, I don't want to sugarcoat too much because it is a very tough environment. We think, it's going to continue to be a tough consumer environment with inflation and all of those things. But what we're looking for the long-term perspective are the companies that can withstand those pressures and come out stronger on the other side. We don't know exactly when that will be, but we do know that the companies that can, pick up market share and, like Kevin said, make their pie a little sweeter than their competitors over the next 6 months, 12 months, however long this economic turmoil lasts, those are the companies that on the other side of it will likely see a lot of fruit being born and a lot of benefits to to the shareholders that were able to position themselves appropriately during the downtimes.
Yeah, and we had all-time highs in there above 192 just about a year ago. Do you guys have an earnings score going into this one on Thursday?
Yeah, we're actually neutral just because the economic headwinds are so tough. But I think we're looking at earnings as an opportunity. If we get any pullbacks, this is exactly the type of stock that we'd like to dip our toes into and look for those opportunities over the next 3 months, 6 months to pick up some shares as the market reacts to, what's certainly going to be a little bit more negative news on the horizon than we've seen in the past.
All right, so neutral going into this report. All right, great stuff as always. Thanks for the data, Andy.
Thank you.
All right, that's Andy Swan, co-founder of LikeFolio.